Hi everybody, I'm Sergey Kilembi and thanks for joining me for the weekly US market reports. Time to trade the markets, perspectives and analysis. First, we're going to have a look at the economic calendar. Second point, we're going to have a look at earnings. On the third point, we're going to have a look at news and cryptocurrency news. Fourth point, we're going to have a look at the S&P 500 sectors map. And finally, we're going to have a look at some charts, some weekly charts. This is the weekly perspective for the week beginning on Monday, July the 24th until Friday, July the 28th of 2017, excuse me. Okay, so now, first of all, here we are looking at the economic calendar. You see what's happening on Monday, July the 24th. We have some news in Germany. The markets manufacturing PMI flash from July. Next in the US at 4 p.m. we're going to have the US existing home sales from June. On Tuesday, July the 25th, back in Germany, we're going to have the IFO business climate from July. Wednesday, July the 26th, we're going to go to Great Britain. We have two economic data, very, very important. First of all, we have the GDP growth rate quarter over quarter from the Q2 and the GDP growth rate year over year from Q2. Back in the US, we're going to have the new home sales from June. And at 8 p.m. on Wednesday, very important day, we're going to have the Fed interest rate decision. And we look at the previous Fed interest rate hike of 25 basis points. Now we are at 1.55%. The consensus is 1.55%, and the forecast is also 1.55%. So we're going to remain stable and neutral without any hike. And on Thursday, July the 27th, in South Korea, we're going to have the GDP growth rates quarter over quarter advance of Q2 and the GDP growth rate year over year advance of Q2. So that's it for the economic calendar. So remember, on Wednesday, July the 26th, we're going to have the Fed, the Federal Reserve interest rate decision. So make sure you note that particular day and be careful, with your trading, because we're going to see reaction and maybe some spikes in volatility in stock markets, in currencies and stuff like that, in the bond market also. Okay, now moving on. Now here we are looking at the earnings. You see, very, very important companies. On Thursday, Monday, the July the 24th, we're gonna have Halliburton, Illinois Tool Works, KCG, Moelis and Company, and that's for the US. Next, on July the 25th, we're gonna have 3M, Amgen, Biogen, and Caterpillar, Chegg, Chubb, DuPont, Eli Lilly, Express Scripts, General Motors, GM, Kimberly-Clark, McDonald's, Texas Instruments, United Technologies. On July the 26th, we're going to have Anthem, we're going to have Boeing, Coca-Cola, Facebook, Ford Motor, General Dynamics, Gilead Sciences, Hilton Worldwide, Las Vegas Sands, Mid-South Bancorp, Mondelez International, Next Hera Energy, Northrop Grumman, PayPal, Public Storage, Thermo Fisher Scientific, Vertex Pharmaceuticals. On July the 27th, we're going to have A10 Networks, ADP, Altria, Amazon, American Tower, Baidu. Also, because you know that Baidu it's operating on the New York Stock Exchange with ADR, so we also need to have a look at that particular company. Next, we're going to have Boston Scientific, Bristol Myers Squibb, Celgene, Charter Communications, Comcast, ConocoPhillips, Customers Bancorp, Dow Dow Chemical, Innova International, Intel, Johnson Controls, Marsh & McLennan Companies, MasterCard, McKesson, New Home, New Media Investment, Praxair, Procter & Gamble, Raytheon, Southwest Airlines, Starbucks, Stryker, United Parcel Service, Verizon, Vocera Communication. On July the 28th, and that's on Friday, we're going to have AbbVie, Actinium Pharmaceuticals, Chevron, ExxonMobil, Merck & Co., and Reynolds American, and also UBS. You also know that UBS is operating and trading at the New York Stock Exchange under ADR. So make sure to have a look at that particular company. Okay, so that's it for your earnings. Next, so now we're gonna have a look at some, excuse me, I'm gonna delete that. Okay, now we're gonna have a look at some market information, market news. We are here at Business Insider, Market Business Insider. So first of all, let's have a look at the markets, what's happening. You see over here, you have billionaire hedge fund manager Bill Ackman. First tweet is a photo of him at Chipotle. Next, we have Bill Gross talking about the Feds, and over there on the far right, you have a picture of Elon Musk, CEO of Tesla. So you see that Tesla is we see a lot of news, about Tesla. You see for the last session, we see all the best performance and the worst performing stocks. Next, another news about Tesla. You see here David Enron talking about Tesla. Tesla bulls look at Elon Musk and think of Steve Jobs, but Tesla is not Apple. In the middle, you have another news about Tesla, the Model 3. Far right, you have Snap. So you already know what's happening with the Snapchat stocks. Commodities. Let's have a look at commodities. Oil and energy. So you see that oil is always on the news. So have a look. Let's have a look at oil this week, and next we're gonna have a look at the oil charts to see what's happening in the price action and on the technicals. And now for currencies. First of all, you see here is one way hackers can be stopped from stealing millions in an initial coin offering. You see a picture of Bitcoin and Ethereum. In the middle, the Trump administration delayed a rule meant to help people launch businesses in the US, is what that means for foreign entrepreneurs. And on the far right, we have news, we have Britain, you have the Prime Minister of Great Britain, Theresa May, and of course, Brexit's always in the news. Here now on the bond market, we have a top trader at Deutsche Bank has reportedly left after a bet went wrong to the tune of $60 million. We have Mr. John Cryan. He is the CEO of Deutsche Bank. In the middle, what you need to know on Wall Street today, well, that was for 3 days ago. And far right, we have a picture of Bank of America logo, and the title is "The Banks Are Falling After Bank of America and Goldman Sachs Earnings." You see, talking about some big banks. You see Bank of America, JP Morgan, Citigroup, Wells Fargo, and more. And finally, here on commodities, a mystery trader made a massive bet that the stock market will go crazy by October, talking about gold and stuff like that. And I think that, yeah, that's it for the news. So remember, Tesla, gold, oil, cryptocurrencies, and banks. That's it. Okay. Now let's move on. Here, now we are at World Coin Index. We're gonna have a look at the cryptocurrencies. And Bitcoin remains number 1, number 2 Ethereum, number 3 Status. Oh, I didn't know that one. Status, ticker symbol SNT. On the fourth spot we have Litecoin. Fifth spot it's Ripple XRP. So that's it. So let's have a look at the market cap. 44.1 billion for Bitcoin. It's rising. You see, it was last week, like 2 weeks ago, it was under the 40 billion mark. So now it's gaining back a huge momentum. The market cap is rising again. So if the Bitcoin continues rising, I think that you're going to see the market cap of the Bitcoin going back to the 50 billion. Number 2, Ethereum market cap at 20 billion. Status market cap at 500 million, 500 plus million, 530 million exactly. And Litecoin market cap at 2.2 billion and Ripple market cap at 6.4 billion. Okay, so that's it. When you have a look at the price graphics for the 7 days, you see that all of the cryptocurrencies are getting back their strong bullish momentum. But next, we're gonna have a look at the charts to see exactly what's happening on the technical side and with the price action. So now let's move on. And here, now we are here. Sorry about that. Here we are at the S&P 500 sectors map, and this is a weekly sectors map performance. What we can see: great week for technology, except for IBM. Great week, 50-50 for services. Of course, great week for Amazon. Next, over here at basic materials, bad week. That's related to oil. Healthcare, that's let's say 85% green, so that's great. You see the big players like J&J, Johnson & Johnson, and the biotech doing great. Industrial goods, that's a 50-50. Bad week for GE. And the aerospace and defense, you see over here, defense product and services, you see companies like Boeing, United Technology, Lockheed Martin, Raytheon, and doing good, and TDJ, Transdigmer, doing great. Utilities, 100% green over here. And now consumer goods, perfect week, great week. And except for here you have the auto manufacturers major, except for GM and Ford. Next, what do we have? Great week also for Apple and stuff like that. Nike, great week. Beverage, great week. And the financials, you see, that's a 50-50. You know, credit services doing great, but investments, company like Goldman Sachs and Charles Schwab's doing not doing great. On the asset management side, bad week for BlackRock. And on the money center banks, in the money center banks industry, you see all the big four, all of them in reds. Okay, so that's it. Now let's have a quick look at the ETFs. Sorry. You see the US, the indices all in green except for the diamonds, and mid cap and small caps. Sorry, mid caps and small caps good. The volatility. The VIX is still low. US sectors, you see healthcare doing great, real estate great, consumer. Over here you have your consumer cyclicals in green, technology in green, utilities in green, consumers non-cyclicals in green, basic materials, you see 0% growth, but bad week for energy and for financials. On the fixed income side, corporate bonds in green, US government bond in green, commodities 50-50, great for gold. GLD is doing great. You see the USO in reds. And what else? The global miners, you see in green except for dust over here. You see the direction daily gold miners bears 3 times ETF, and the GDST over here, direction daily junior gold miners bear 3 times ETF in red. It's almost a minus 6 0.6% for the GDST and minus 7.3% for the dust. And let's have a look at internationals. Emerging markets in green, developed markets in green, Europe in red, Asian Pacific in green, Japan in green, Brazil in green, Latin America in green, Russia in red, India red, and China in green. So that's it for your ETFs. And now let's go to the charts. Okay. First of all, let's begin with the Dow Jones Industrial Average. And over here, as you can see, last week we had a huge bullish candle. It was this one. But now we are in a inside week candle. We have a type of we have a bearish candle. You see interaction over here with the 4 weeks moving average, and then market gain back bullish momentum to close higher at 21,580 points. We have a huge resistance over here at 21,633, max resistance at 21,688. That's 21 if we put a round number on that, that's 21,700 points. And the targets, as you can see over here, that's your huge A, B, C, D, and we are looking at the D point at the channel's resistance around the 22,000 points, maybe higher. Oh, sorry about that. Over here, maybe higher at 22,200 points for the Dow Jones. So next week, what we can expect more sideways movement, because we already see and recognize the pattern. That's a uptrending. We are uptrending, but we are going higher in 8 steps in a bullish stairs pattern. Okay, so that's it for the Dow Jones Industrial Average. Now let's move on and let's have a look at the diamond, the DIA. And now the DIA, excuse me, I'm going to delete that. Okay, over here, DIA, okay, and exactly the same thing for the DIA. You see over here, I was expecting a bearish move, but that didn't happen. Maybe we can see that over here if we have a continuation, and maybe the market's gonna remain with that indecision. We can top over here. So maybe that's our that's gonna be our resistance. We're gonna clone this one. Yeah, perfectly there. We're gonna have resistance. We have resistance now at $216. You see over here interaction with the 4 weeks moving average at 214. And what we're gonna expect for next week, the same as the Dow Jones Industrial Average, sideways movements. Now we are in an inside week type of inside week candle, as you can see here. So that's what I'm expecting for next week. And also we are uptrending, but remember we have a huge gap over here at $206. You see. And that gap must be filled, but when, I don't know. So now back at the price action, the current price action, I'm expecting maybe if we go higher, we need a close above 216.85, and maybe we can shoot higher towards the $220 for the diamond. Okay, that's it. Now let's move on. Let's continue. Now let's have a look at the IXIC, and that's your Nasdaq Composite. Nasdaq Composites. Okay. Excuse me. Okay, Nasdaq Composite over here. Great week, very bullish, strong candle. That's the perfect continuation for that previous candle, that previous bullish, strong bullish candle. Now we have a continuation, and we are shooting, as you can see over here, shooting now towards the like that. We're going to the channel's resistance. The target is 64.80. Okay, that's it. But same as the Dow Jones, we have a huge gap down here around the 5900 points, and that gap also must be filled, but for the moment no. Take a look at that. You see here we have your 4 weeks moving average and your 8-week moving average exactly at the middle of that strong bullish candle at 62.35, and we are way too far. You're already, that's a great extension, you know, you're too far from the moving averages. So in the near term we're gonna need to come back and interact with the 4 weeks moving average. So we can expect to see the market to go higher at 64.80 over here, and then mark a pause, you see, and have sideways movements in order to have the moving averages, you know, come back and interact with the price, with the current price. Okay, so that's it. So we remain bullish on the Nasdaq Composite. Now let's have a look at the NDX. NDX is your Nasdaq 100. And now Nasdaq 100, excuse me, let's, oops. Okay, Nasdaq 100 over here, pam pam pam. Okay, that's it. Nasdaq 100. Okay, like that. Nasdaq 100, exactly the same thing. You see the past resistance at 58.80, break above that particular resistance, and now we are at 59.21, and we are heading towards 59.50, and my target is 6,000 points for the Nasdaq 100, and it seems to me that we're gonna reach that target in, let's see, over here, August. First week of August we're gonna be at 6,000 points if the Nasdaq continues with his bullish trend. Okay, so that's it for your Nasdaq 100. And now let's have a look at the Qs, the Nasdaq ETF, QQQ. Over here, exactly the same thing. We remain bullish. And let's have a look at the price action. You see over here, bullish. Now the past resistance, we have resistance over here at 144. Break above. Now we are at 144, and we have another resistance at $144 and $50, and we have a special mark at $145 for the QQQ. And if we can break higher, we're gonna go towards the 146 and 147. But you see that's a continuation. You see the pattern over here. That's a bullish pattern. You see over here, top we have a bottom here at the area, the zone of the 13-week moving average. You see here that strong bullish candle breaking through to the upside above the 4 weeks moving average and 8-week moving average. You see, completely cancel the that great bearish candle over here, going to the top of that, and then boom, going back to the resistance, break above the resistance, and now we are making new highs. So I'm expecting the QQQ to go higher. And now let's have a look at the S&P 500s, US 500s. Okay, boom. Okay, that's it. Okay, US 500. And over here, same thing. You see the past resistance at 24.45, 24.50. You see where we have those spikes over here, 24.52, and then boom, break above. And now we are making new highs closer to 24.80, and maybe we're gonna shoot higher towards 24.80. If you have a close above 24.80, around 24.85, we're gonna go. We can easily go and easily reach the 2500 for the Nasdaq. But remember, we have a huge gap over here, that bullish gap between 2350 and 2370. That's a 20-point gap, and that's huge. That is huge. Okay, but for the momentum is still bullish, so I'm expecting to see a continuation to that particular bullish movement. Okay, now let's have a look at the SPY. That's your S&P 500 ETF. Okay, and here we are. Okay, what can we see over here? Exactly the same thing. You see your 245, that's your max resistance. You see the region of those spikes over here, but the resistance was 244 and 10. Break above with that huge strong bullish candle, continuation with this one, and now we are at 247, looking at a close above 247.50. and if we reach that, and if you have continuation, we're gonna shoot higher towards the $250 for the spiders, so we remain bullish. Okay, now let's have a look at the VIX, the volatility index. If the markets are going higher, you see that the VIX is trading lower, and that's it. We have the VIX over here lower, creating new lows, and now we have a close below 950, and we are exactly at 9.36. Take a look at all the moving averages. They are going sideways, they are horizontal, and all of the moving averages are acting as resistance. That means that we're going to remain bearish on the VIX. We're going to remain low, creating new lows. Maybe we can reach the 9 points. And take a look over here also, we have that huge gap, and the range, the trading range for the VIX is going to be 9 as support and 1230 as resistance, 1230, 1250 as resistance. Okay, now let's have a look at the inverted VIX, the XIV. Boom. And your XIV is strong and very looking very bullish. Take a look at that. Boom, magnificent. You see, that's a strong, a beautiful and strong bullish candlestick. See, opening at 88 and gaining $6 towards the 94. So that's huge, a huge bullish candle. See, that one is not happening, so we can delete that. Also over here, remember, we have also a huge gap over here, but for now we remain bullish. You see, above all of the moving averages. That's your 4 moving averages over here. Here you have your 8 moving averages, 8-week moving average. Over here your 13-week moving average. Over here your 21 moving average, and over here your 26 moving average. All of the moving averages are acting as support. So that means we are in a very strong bullish trend, upside trending. Okay, and closer. I think that if we have another close above if we have a close, excuse me, above $96, we're gonna shoot higher and go towards the $100 for the XIV. Okay, that's it. So that's it for your XIV. And next, now let's have a look at small caps. I'm gonna have a look at the Russell 2000, US 2000. Here, that's your small cap. Okay, Russell 2000. And here, what do we have? Oh, another bullish week, but you see with a huge spike like this particular candlestick over here. Same thing. You can clearly see the pattern. You know, that's a step stairs pattern. We are uptrending. We are still bullish, but you know, with a lot of indecision. You see, the market is making new highs, and then you know is losing. You see, losing points and going to close lower, but we are still in progress and we are still gaining points. You know, we are still bullish. You see, now we are out of that particular trading range over here. You see 1, 2, 3, 4, 5, 6 weeks of inside weak candle, and now we are just above that particular trading range. We are still inside that range if you take in consideration the spikes. You see these long tails over here, that particular tail over here, topping at 14.25. But now you see we have a bridge and a break above. So now we need a complete candlestick to close above that particular level. You see, and that level it's gonna be to have a confirmation, we need a close above. A close at or above, above is better, above 1440. Okay, excuse me. And now let's have a look at the IWM. That's your Russell 2000 ETF. Excuse me, I'm gonna drink. Okay, perfect. Okay, exactly the same thing, same pattern over here. You're seeing exactly the same thing. You see the spike over here, top at 143, just below 143, and we have a huge spike going at reaching 143.52. And now we need a complete close above 143, and then we're gonna shoot higher to be outside of that particular trading range. You see that 1, 2, 3, 4, 5, 6 week also in a inside week candle type of pattern, type of formation, better said. Okay, so now we need that. Okay, so that's it for your IWM. And now let's have a look at the bonds. First of all, let's begin with the Treasury Notes, the 10 years Treasury Notes. Here, 10 years Treasury Notes future. Also continuation, you see, at the previous bullish candle. Now we are above we are back in that particular channel, uptrending bullish channel over here. That's your channel support. You see over here we have your 26 weeks moving average, over here 21 weeks moving average in convergence with the 4 weeks moving average at 125.57. Over here we have your 13 weeks moving average and your 8 weeks moving average. We have a close below above those two moving averages, and now we are going back. If you take a look over here, that's a pivot point at 126, and we are at that level. So now what do we need? We need a continuation above 126.40 to go back towards to go upside and to go back to that resistance over here at 127, and then only then we can we're gonna see. I'm gonna draw these. Oh, excuse me. I'm gonna draw these like that, and then we're gonna see that particular move going back towards the channel's resistance at exactly 129. Okay, so we have a continuation. Remember, first over here, and take a look at that. We have your 52 weeks moving average and your 208 moving average over here. Convergence at 127.20 and acting as max resistance. That's your 104 moving average at $128 for your treasury, for your 10 years treasury note. Okay, so that's it. Excuse me, wait a second. Okay, now I'm back. Okay, that's perfect. And yeah, if we have continuation to that particular bullish candlestick over here, we're gonna go towards the first of all, resistance here at 127, and then if we have a break above, we're gonna go towards the $128. Okay, so now let's continue and let's have a look at the T-bonds, the 30 years Treasury bonds. Whoa, excuse me. And I need, let's see. Okay, that's it. Over here, exactly the same scenario. You see bullish week over here, boom, and we are back in the particular uptrend channels support above. That's your here. Excuse me, I'm gonna maximize it. That's it. Over here you have your 26 moving average, 21 moving average, 4 weeks moving average, 13 week moving average, 8 weeks moving average. Over here at 154. Now we need a continuation above 155, going back towards 157, and you see that's gonna be the area of the 52 weeks moving average. And then if you can go higher, over here we have at 159.25, that's your 104 weeks moving average, and over there max resistance at 160. Okay, but by that time, you know, I think that we're gonna be much higher. So if we're gonna break through all of those levels then are already mentioned, we're gonna head towards 161.50. Okay, so that's it for your 30 bonds, 30 year your 30 years treasury bonds. Okay, so now let's have a look at the US dollar index, the DXY. Okay, and for the DXY we need to reduce the size of the graph because there's a lot to comment over here and a lot to see also. Okay, now first let me put it that way. No, I need more. Okay, that's it. You see, back in June of 2014, over here at the bottom left of your screens, you see that the dollar was at, excuse me, I'm gonna erase that. Your dollar was at 80 points. Now, huge run towards the upside. That's a parabolic move from 80 towards over here 100. No, 99, yeah, that's 100. 99 and 98, that's 100. Next, what you can see, you see a trading range moving sideways, trading with resistance at, let's say, 100, and support at exactly where we are today at 92.90. That's your trading range. You see resistance, support, resistance, support, back at resistance, break above resistance, making new highs for the dollar index at 104, and then boom, going back towards here 93.78. You see that's your past support level, and now we have a peak at the support level right here, exactly at 91.98. If you take a closer look, that's where we are. That's where we have our 208 weeks moving average here in green. See that particular moving average over here, boom, this one, and we are heading towards that particular level. But if you take a look, what can you see? You see a perfect head, the head over here, that's your left shoulder. You see a shoulder, head, and maybe we are going towards the second shoulder formation. So that's a head and shoulders formation on top of, at the top and on top of a bullish trend. So that means a reversal. So you see the Trump administration and Trump policy trying to have a weaker dollar, but for the moment you see the dollar is still strong. So you see 80, that was your bottom back in 2014, in summer 2014 over here, but now the dollar is still strong. So we are above 92, below 92, and below that particular moving average over here, your 208 moving average. That's gonna be another story. But for the moment, what I'm expecting the dollar to bounce at 92 to find bottom, you see, to reject the 208 moving average, and then bounce back higher, going back towards the that particular trading range resistance at 98, maybe 100, and then reject that, and then going back with more power to break below that particular support at 92, and then go and start to trade below the 92 mark. Okay, but it also can happen right now. You can see that move also. You see, because the dollar is it's coming strong, very, very fast and very strong towards that particular support over here. So we can clearly see in a few weeks or by the end of the year a break below the 92 mark. But if you see a bounce, if that particular level rejects lower prices and is acting as a support, we're gonna see the dollar bouncing back higher and going back towards 100. Okay, if not, so we have to be careful and to be watching our positions. So that's for you guys who are trading. You see, that's related to all commodities, gold, oil, natural gas, copper, whatever. And also for you guys who are trading the forex, you see all the currency pairs involving the US dollar in it. Okay, so be careful. And now let's go and let's have a look at commodities. So we're gonna have a look at crude oil, the WTI. Okay, boom, that's it. And you see over here, you see the bottom at 29, below 30, and now you see that we are in a trading range. But you see that's exactly the perfect opposite of the dollar. You see, in summer of 2014 we have a peak in the oil and a bottom in the US dollar. Next, remember, run in the dollar and short, a lot of shorting in huge falling oil prices towards the bottom at here 30 and 30 for the crude oil. That was the top at more than 100 for the dollar. You see now we are in a trading range exactly As for the dollar, we have a head and shoulders formation on top, and here we have a inverted head and shoulders formation at the bottom. So you also know, when you take a look at the fundamentals of oil, when you see members of the OPEC and those countries trying to reduce the oil production, first of all, you have Russia on top of that with more than 11 million barrels a day, if I remember. Don't trust me on that, so make sure to have a look at the actual numbers, but I know that for sure that's above 10 millions, between 10 millions and 11 millions barrels a day, followed by Saudi Arabia. Saudi Arabia, it's around, they're around like 9 million barrels a day. So they're trying to reduce those numbers, though. If they reduce those numbers, that means less supply, you know, for oil, and if demand increases and there's less supply, so that means that the oil prices are gonna go higher. So that's what I'm expecting. But now you see, we can now we're gonna focus on the actual price action, more in the shorter term price action. What we can see over here, you see here we have resistance at 54, support over here at 43. You see 43 one time, 43 two times, and now we have like 1, 2, 3, 4, 5 4 weeks with a inside week candle, break above, but the break above was bearish, rejected the 13-week moving average at 46.63, trying to interact with the 21 weeks moving average over here at 47.50, excuse me, and that's your downtrend channel resistance, and we are starting to see a rejection of the downtrend channels resistance, and maybe that's gonna take the prices of oil back towards the channels support over here at $40 a barrel. So that's it. But if we break above 48, and if you take a look over here, we have your 26 moving average, 52 weeks moving average here in pink, and your 21 weeks moving average. If you can go above and have a close above those moving averages over here, let's say $50 a barrel for your crude oil, and then shoot higher towards the $52 mark and then $54 mark. So that means higher prices for your oil. But you see that it's going to be tough. It's going to be very, very difficult, you see, to reach those levels. So now let's see. So make sure you're trading oil and take all the precautions and have a strict risk management, you see. So make sure that you have your stops in place while trading crude oil. Okay, that's it. So now let's continue, and now let's have a look. Let's take a look at gold futures. Okay, here we are having a look at gold futures. You can clearly see our great and strong and large bullish channel with supports over here closer to 1050, 1050, $1,040 over here, resistance at 1375. Here you have your lows, another low, a higher low here at 1130, and another higher low here at 1210, between 1210 and 1220. You see over here we have like a small flag over here. You see that type of formation. We are still trading below the we are in a lower parts. You see, that's your upper part of the channel, and that's your lower part of the channel, closer to the supports of the uptrend channel. So we are trading around those levels. So now what I'm expecting gold to go back towards those levels over here. That's your 1293 and 1293 you see acting as a resistance over here, and that's a past pivot point. One time, two times, yeah, we can also count that as a pivot point. Three times, four times over here. So now I'm expecting gold to go back to those levels and to retest that particular resistance at 1290, 1293, 1295, and if we can break above those levels, then you're gonna see gold going back towards the 1300s first, and then 1330, 13, no, first 1320, and then 1330. Okay, that's it in the short term, what I'm expecting gold to do. Okay, but you see, in order to see that, as you already know, you see that all the commodities are tied and are trading in US dollars. So if you see further lower prices in the DXY, the US dollar index, so we're going to see oil prices rising, a rise in oil prices, and also a rise in all commodities, and also a rise, and immediately we're going to see a rise in gold prices also. Okay, so now let's have a look at silver. Okay, silver futures, and for silver that's exactly the same thing. You see, exactly. But we are trading outside of the channel's uptrend channel. We are below the channel's resistance over here. Now we are going back to retest the channel. We are in a inside week candle. You see that great bearish candlestick over here, 1 week, 2 week in inside week candle type of formation. Over here, what you can see a downtrend channel formation. Here you have your support. Over here you have your resistance. Back in here you have your support. Now here you have your resistance, and back here you have your channel support. And now you're going back to this particular point over here at 1670, and that's your channel's resistance. As you can see, we're pretty close of that level. Take a look at here the interaction, and the interaction with the moving averages. First of all, you have your 4 weeks moving average over here at 1612, close above that particular moving average, and that particular moving average is right in the middle of that strong bearish candle. Now we're going back to the top of that particular bearish candle at 1658, and at 1658 what do we have? We have all of the others moving averages. You have your 4 weeks moving average, your 13-week moving average, and your 104 moving average acting as strong resistance at that particular level. And that particular level was also a pivot point. Over here we have your doji type of candlestick over here at 1670, and now we're going back towards the channel's resistance at 1677. Okay, if we can break above that particular level, we can see that you can see the silver prices going back into that particular uptrending bullish channel, and then maybe move back towards the region of that particular past pivot point over here at 1758, 1760, and that's our resistance, that's our target. But first of all, we need to break above that particular channel's resistance over here at 1675, and then going back higher. And take a look at your $70 mark. That's a past pivot point, a past support over here, so now acting as a resistance. Okay, so that's it for silver. And now that's it for the precious metals. And now let's entering the crypto space. First of all, let's have a look at Bitcoin, BTC USD over here at GDAX. Now that's Forex, and wow, you see that huge reversal, bullish engulfing type of candle, very bullish reversal, strong bullish candle. You see the lows over here, finally the boot. I think so that finally we have found a bottom, a bottom at 1830 for the Bitcoin. And as you can see, if you start your movement over here at $1,000 and extend it towards the $3,000, and for you guys, for your lowers of Fibonacci retracements, that's around a 50%, yeah, above a 50% retracement with your Fibonacci. So now if you can extend that particular movement towards the in the future for a Fibonacci extension beginning at $2,000 extended, you see the first extension was a movement of $2,000. So now having a inception point at $2,000 and extended it for $2,000 in the future, we have a potential rise of $2,000, and Bitcoin maybe and can reach $4,000. Okay, so that's it. That's your typical A, B, C, D pattern. Okay, that's a uptrend channel. You see, but over here we had a strong resistance at 1280. That's your region of your 52 weeks moving average. You see over here, that's it over here. But you see the Bitcoin chooses to interact with the 21 weeks moving average and 26 week moving average, and then boom, shooting back higher. You see, type of an engulfing bullish candle going back towards the max high, and your strong resistance at $3,000 reaching 2950, 2960, as you can see. And now we are in a type of inside week type of candle. We are beginning the week in bearish mode, but that's just the beginning. We are on Sunday, so we can see that during the week it can revert. As you can see over here, we're already going back higher. We did mark a minimum, but now maybe you're going back higher, and we need to break above $3,000, okay, in order to see more higher prices. Okay, so that's it. So Bitcoin, let's see if we can go higher during this week. Okay, now let's have a look at Ethereum. ETH. Okay, Ethereum exactly the same thing. You see, remember from the highs over here at 420, you see huge downtrend movement. You see here the flash crash. You see going back towards the $75. Now last week was a inside week type of candle. We are still trading in an inside week type of candle. We are in a triangle formation. You see over here with your 21 week and 26 week moving average acting as support. That's the base of your triangle, and then we have the 4 weeks moving average, you see, acting as your resistance perfectly here. You see, that's that particular moving average, and you see the point of convergence between the 4 weeks moving average and the 13 week moving average here in red at 215, excuse me. And now we are in another inside week candle. We already marked a minimum, and we have rejected here that particular point of convergence. So now what we can see maybe the Ethereum going back higher. Take a look at the spreads between the point of convergence between the 4 weeks moving average and the 13 weeks moving average, and your 8 week moving average over here. That's 220 towards 270. That's $50, you see, of spreads. $50 of great upside potential, but also be careful because you have your 21 weeks moving average at 150 and 220 and 150. That's $70, you know, of of spread, and that's huge. That means volatility. And also we have a huge gap over here, and you see, take a look, your 26-week moving average at 155, that's your support. You see that's the lower point, and the higher point is 157. So that's exactly $57 of gap, and that gap must be filled, not filled with tails and shadows and candlestick shadows, candlestick tails, but actual solid candlestick, but a price. We need trading at, and we need to see a complete candlestick in order to fill those gaps. Okay, so that's huge. So pay attention to that. See, but we can also we can see that's possible. There's a great probability to see a rise in Ethereum prices. You see, as I'm expecting here. I'm expecting to see that particular level, but we cannot forget that particular gap over here. Okay, that's it. And finally, let's close this week with our final crypto, and we're gonna have a look at Litecoin. And here, Litecoin, that's exactly the same thing. We are beginning the week in with a bearish candle. We still remain in a inside week candle, like 1, 2, 3 weeks, and that's the 4th week in a row. And we are in a, you see over here, what are we seeing? You see, that's a triangle. We are in a triangle formation over here. If you take the lows and take the highs, so that's it. See, like that. This one, okay. So this one gonna be in red, and this one in green. Okay, so that's it. Over here you have your resistance here, like that, and I'm gonna clone that. And you have your excuse me, and supports over here, and this one in red. Okay, so that's it. So now what are we expecting? We are just in the middle. You see over here also, that's a pivot point. That's your A, B, C. Maybe you're gonna look for a D point more higher. So that also can happen. We are just at the region of the 4 weeks moving average, between the 4 weeks moving average and your 8 weeks moving average over here. So I'm expecting to see more sideways movements and a direction. We need a direction. Okay, we need a follow. We need to follow. We need a following. You see, we need this. We need to see this over here. We need to see something like that. You see, boom, to go much higher, like that. We need this, or maybe that can happen also. Okay, so that's it. Okay, so people, thank you very much for hanging with me, and hope it helps, and see you next week for another analysis, another time to trade weekly US markets weekly reports. Okay, have a great week. Bye.